Hey, happy Monday, everyone. It's Matt Donahue with Mission Financial Planners market update for the week. Happy Mother's Day to all you moms out there, and I hope you all had a wonderful Mother's Day weekend. Let's go ahead and jump into it. So the markets continue their tear. Third week in a row, S&P went up about 2%, Nasdaq went up about 1. They are slightly below the record levels they achieved prior to that April pullback that we saw. But the trend of higher than expected inflation numbers is weighing on U.S. consumers. University of Michigan Sentiment Survey for May posted a preliminary reading of 67.4, which is down from 77.2 in April. Still high though, right? And the survey results also showed that consumers expect the inflation rate to rise actually rather than fall. The bright earnings outlook that we talked about last week is continuing. We're expecting to see more positive results in Q2 here. Over the course of April, analysts lifted their earnings per share estimate for second quarter results by 0.7%. And that's the first time in more than 2 years that estimates have risen rather than decreased during the first month of a quarter. China's market is also on a tear. The index of mainland Chinese stocks has rallied quite significantly over the last 3 weeks, up 14% compared to the roughly 5% rise we've seen in the S&P 500. That latest surge follows a tough 2023 when Chinese stocks lagged indices in the U.S. and other major markets by a wide margin. Anxiety seems to be going down, which is interesting, right? People are thinking that inflation is going to go up, but for some reason, anxiety is down. The CBOE Volatility Index was down nearly 7% for the week relative to their recent high on April 15th. The index is actually down more than 34% overall in just about a month. That labor market, hey, jobs, 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 right? The market is watching anything job related really closely. They're trying to read the tea leaves to see if there's going to be any shift by the Fed on interest rates. And the latest weekly update from the U.S. government recorded 231,000 unemployment claims, which was up from 209,000 the week before. So that had a lot to do with why the market had a great week last week. The UK is returning to growth after a mild recession last year. Their government reported on Friday that GDP expanded at 0.6% in the first quarter, and that exceeded expectations. Consumer Price Index is scheduled for Wednesday and will show whether really inflation is still ticking up or down. Last month's CPI report showed an annual rate of 3.5% in March, up from 3.2% in the previous month. Excluding volatile food and energy prices, core inflation rose 3.8% in March. So we'll see what those April numbers are. The week ahead, no major reports for today. Tomorrow, Tuesday, is the producer price index. Wednesday is the consumer price index. And then retail sales, business inventories, and the housing market index from the National Association of Home Builders. Thursday is housing starts, weekly unemployment, export and import prices, and industrial production and capacity utilization. Friday is the Conference Board leading economic index for the U.S. Philosophy quote of the week: fueling the habit bonfire. Every habit and capability is confirmed and grows in its corresponding actions, walking by walking and running by running. Therefore, if you want to do something, make a habit of it. If you don't want to do that, don't, but make a habit of something else instead. The same principles at work in our state of mind. When you get angry, you've not only experienced that evil, but you've also reinforced a bad habit, adding fuel to the fire. So good point there. It's it's kind of the what you do is who you are, right? Good habits beget good habits, bad habits beget bad habits. And, I think a lot of us have read over the years that some people, for a lot of people, I should say, it takes about 90 days to make a new habit just something that you do. So give it time. It's not going to happen overnight. Tax tips: 8 facts about penalties for filing and paying late and how to abate penalties. So there's 2 penalties you deal with when you file late, you owe taxes. The first is failure to file. The second is failure to pay. The failure to file is usually more expensive than failure to pay. In most cases, it's actually a lot more. So if you can't pay what you owe by the due date, you should still file your return and pay as much as you can. The failure to file penalty is normally 5% of the unpaid taxes for each month or part of the month the return is late. It will not exceed 25% of your unpaid taxes. If you file your return more than 60 days after the due date or extended due date, the minimum penalty is the smaller of $135 or 100% of the unpaid tax. Failure to pay, on the other hand, is generally 5% per month of your unpaid taxes, and it applies for each month or part of a month your taxes remain unpaid and starts accruing the day after taxes are due. It can build up to as much as 25% of your unpaid taxes. If they both apply, the most you can get charged from a penalty standpoint is 5%. If you requested an extension and paid at least 90% of the taxes you owe, you probably aren't going to face a failure to pay penalty. However, you do have to pay the remaining balance by the extended due date. You will owe interest on any taxes paid after April 15th, even if you filed an extension. You will not, however, have to pay a failure to file or failure to pay penalty if you can show reasonable cause for not filing or paying on time. Okay, some of the abatement procedures. So a lot of people are really just unaware that if they're late filing or paying and it causes penalties, they could get out of paying them. If you have demonstrated full compliance, meaning you have filed your tax returns and paid any tax that was owed over the last 3 years, you are able to request a waiver of penalties. It's called a first-time abatement, and this is IRS policy, and it's used to reward past tax compliant taxpayers and to promote future compliance. It's actually in the Internal Revenue Manual. So the issue is a lot of taxpayers with good histories, they don't get offered this. You have to know about it. You have to actually ask for it. Okay, and just remember, the abatement requests are approved if you meet the clean past 3-year rule. And don't forget, you have to ask for it. Don't think they're just going to offer it to you. Okay. That's it for taxes, right? Abatement, who knew, right? They don't offer it to anyone, realistically. Health tip of the week. So May is Mental Health Awareness Month, so we're doing our health tips based on mental health. And this one is actually, I think, kind of an uplifting one. It's about finding joy in every place in every phase of your life. So this was really an interesting read for me when I first went through this article. Again, it comes from the Mayo Clinic. If you want to read the full thing, go to our website, check out our blog. The full thing is there. But the article essentially gets down to the difference between joy and happiness. And so joy, and I'm going to read this right out of it. Joy isn't happiness. Happiness is a reaction to things happening around you, like having a fun outing with a friend. When you're struggling, it's harder to be happy, but you can still have joy, because joy is a state of mind. While happiness and joy can be intertwined, joy is more profound and longer lasting. This is the big stuff, right? Like finding your soulmate or holding your baby for the first time. It could even be small things that soothe your spirit. You just need to be open to it. And so the example they give in the article, and it's interesting how this kind of ties back into a lot of the philosophy stuff we talk about. The example in the article was taking a dog for a walk. Maybe it's kind of rainy. Maybe your dog is kind of an idiot, right? I mean, I've had dogs, so but you maybe you're not really looking forward to it. But then you get out there, you start walking, you start doing stuff, with the dog and all that, and it actually turns into a decent time, right? That's finding joy, right? So go out and do it. So there's no one way to do it. There's no right way to do it, but just reflect on a time when you did feel that joy. What were you doing? Who were you with? If you evaluate it, it helps you home in more importantly on what matters to you. And this can really help with your mental well-being over time. So one thing you could do if you're not sure, just think about the last day. Yesterday was Mother's Day, right? Yesterday was Mother's Day. So name 3 things that happened in the past 24 hours that you're grateful for. Gratitude plays into joy. Okay, but check out that article. It's a really, really good read. It's really short too, so not quite as long-winded as we normally are. But hey, everyone, have a great week. Lots of great stuff going on in the market. Hopefully, we're going to get you a good inflation report this week. If not, we know the markets will go crazy. If we do, they're going to go crazy in the right way. And again, happy Mother's Day to all those moms out there. I hope you all had just a fantastic holiday, and we'll see you next week. Thanks again, everyone.